Is Uber moving into a buy zone? Meaning, is it a good time to buy Uber? Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. Hit that bell icon to get those notifications when a new video drops. Also, check out that description box to check out some of my books and podcasts and Instagrams and foundations, all of the great stuff we do around the globe. But as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight on into it. Uber. Is Uber sliding into the buy zone? What do you mean by that, Prince? We all know Uber just IPO'd here a couple months ago, coming in strong at a 40-something dollars, right? And like as you guys and girls already know, as you watch this, you know that I don't buy IPOs. You can see here this video titled, Why I Don't Purchase IPOs. And the reason why I don't purchase IPOs is before this exact same reason. Reason being is IPOs, the stock comes out very strong, and then once it comes out strong, it has a massive sell-off because it comes in very strong, overpriced, everybody's hyped. Just like Lyft was, Uber was, Airbnb will be. It's a hot tech company. It'll have great marketing. It'll have everybody excited. But what is the old saying? When others are greedy, be fearful. When others are fearful, be greedy. Right now we're looking at Uber. It has slid all the way down about 40%, sitting today at $26. Today was a very, very interesting day because today was the end of the lockout. Lockout being that this was the first day that the insiders can sell their stock. So when the stock goes IPO, the people that got in at the bottom or before it even got public, they have to hold their stocks for a certain period. Today is the day that they could let their stocks go. Now, we all know just a day or two ago, Uber is a non-profitable company. Just in this last quarter, it lost about $1.6 billion in Uber. And I think it was, the statistics said they were losing about $1 per ride, right? $1 per ride. Every time somebody catches a ride, it loses about $1 in profitability. And the CEO stated they don't plan on being profitable until 2021. So it's a non-profitable company. I think it has a pretty nice, strong brand, but it's not looking too good in the Uber land. But the thing about it is, when this stock was up at 40-something dollars in the IPO, going trailing to 50 or whatever the case may be, that people were saying, I did not like the stock, overvalued, overhyped. But now that it slid, almost coming on down to 50% of its IPO, or when it hit the market, now it's sliding into my buy zone. Why is it sliding into my buy zone? Because I do believe that Uber, when you look at the back end of Uber, let's look at the back end first. So right up here on ETrade or whatnot, we're going to slide over here to insider activity. Up on the insider activity, we're going to click on ownership. Now, up on the ownership, right? Top owners. Let's see who's the top owners of these companies. You have Alphabet, which is Google. You have Fidelity. You got Goldman Sachs. You got a couple other companies here. Right? Alphabet has 71 million shares. Goldman Sachs has about 70 million shares. Fidelity has 26 million shares, equal to billions and billions and billions of dollars. So it's not even to mention someone else here, SB Investment Advisors, has a UK company, has $210 billion tied up into Uber. So these are some very big backers that have billions of dollars into Uber. As Uber burns through cash, just like Tesla did, just like Facebook did, just like a lot of these tech companies do, they come out and they burn through a lot of cash very fast before they figure it out. And now, will Uber figure it out? Now that it's close to about $25, it's getting close to my range. Not as nice as I would like to see it, but $25 for an Uber, I think it's a nice little pickup. I think that it's the number one brand in the ride-sharing app. Some people may disagree, but I think it's the number one brand, and it has some big backers. As you guys can see for yourself up under here, the top owners are Google. Top owners are Fidelity, Goldman Sachs, just to name a few that have billions and billions of dollars tied into Uber. Doesn't mean they won't sell them all off, but these are initial investors in the Uber. So that these people are putting billions of dollars into Uber, I think that over the long run, Uber will figure it out. And at $25, I'm a little bit more likely, or 26, you would say, I'm a little bit more likely to take that risk. I think it's more of it's a speculative thing because it's a non-profitable company. You're going to be betting on their future because right now they're not even making money. They're not even turning a profit. But at $25, I think that in the next 2 to 3 or 4 or 5 years, I wouldn't be surprised if it'd be trading up there about $200, $150 to $200 in the future with Facebook. I wouldn't be surprised. But I think they're going to figure it out. I think in the long term, they're going to figure it out by looking at the backing that it has, looking at its industry in that space. You only really have two big juggernauts, which is Lyft and which is Uber. And I think Uber, we looked at the finances. Uber is way stronger on the sheets, is way stronger in the sheets, but they're way stronger on their financial statements than Lyft is. So I'm looking at, am I willing to take a bet on the top brand in a particular industry, tech company, for about $25? This is something that goes at the 10% of your very speculative of your portfolio. It gives a little spice and a little fun. And the reason why I like it now, I love bad news. Everybody's selling off the company. As you can see today, look at this chart. This is the chart that goes all the way back to an Uber IPO here in May. We're going to look down here at the volume. Look at it today. All of this volume. You see all of this. Let's narrow down this chart. You see how Uber started to slide off? And you see all of these red days start to come out. These red days are coming out because people are selling. And today ended the lockout, meaning that companies like Google, Goldman Sachs, and Fidelity could sell off their shares. And we've seen a large amount of people sell off their shares. And we also seen that they had bad earnings. It's their first earnings, and it was bad. That's why I don't buy IPOs. I wait till the earnings come out. And now that I see fear, this is when I want to get greedy. I see a lot of fear in Uber. People are not trusting Uber in the long term. So now it's sliding into my buying territory. This is why I'm looking at Uber. This is why I like Uber, right? Right now, the hot market, when the market's hitting all-time highs and everybody's doing well, and you got this sense of euphoria during the market, it's kind of hard to find bargains. It's kind of hard to find things that are doing bad. So here we have a good, I believe, a company that's the number one in the space, that has a very strong brand, that has a lot of big backing by the banks, and have a lot of big backing by the banks. I think that in the future, I think right now, it's sliding into my buy territory. Y'all let me know what you guys and girls think. Comment below. Until the next video, podcast, cartoon, or whatever else you see me do crazy around the globe. Peace, be safe, I'm out. Thank you.